You're seeing a little bit of a higher than expected number, 457,000 claims. The expectation there was 442,000 claims. Also represents a gain from last week. Non-farm productivity up at 1.9%, higher than the 1% expectation. Also, unit labor costs down 0.1%. Very interesting. Mike McKee, you've been watching these numbers. What does this tell you?
Tells me that a lot of people are not going to be particularly happy, Betty, because the gain of the month of 20,000 in jobless claims more than reverses the 18,000 we saw decline last week. So a thought that we might be having some progress kind of goes out the window. We're still treading water in the middle of the range. We thought there might be a little bit of a rise, that it might have been overdone last week, but it may have just been statistical noise related to the Columbus Day holiday back in October. And so we are not making any progress in the jobless front towards the end of job cutting. As far as productivity, that's one of those stories that's either that's both good news and bad news. You want additional productivity to raise living standards, but as long as employers are able to get more work out of their existing workforce, we're probably not going to see a lot of hiring. When we saw a decline in productivity last quarter, people thought that might mean companies were going to need to add workers. But if productivity rises more than expected, as it did, that gives them an excuse not to.
Basically, this is telling you that it's costing less to get more out of your workers for the companies, right?
Unit labor costs fell by 0.1%. Companies are holding the line on labor costs at this point. That's good for corporate profits, though, so that might play into the stock market's gains.